Hello and welcome back to the Geordie Pig Investor channel. Today we're going to have a look through, is National Grid stock a buy right now? What is National Grid? Stock ticker NG. National Grid PLC is an energy giant that plays a pivotal role in powering economies and ensuring the smooth flow of electricity and gas across vast landscapes. At its core, National Grid operates as a transmission company owning and managing extensive networks of electricity and gas that form the backbone of energy infrastructure in the UK and northeastern United States. National Grid primarily makes its money through regulated revenues derived from the rates it charges utility companies for using its transmission networks. These rates are determined by regulatory bodies, offering the company a stable and predictable income stream. Moreover, while the foundations of its business are rooted in these regulated activities, National Grid has also been investing significantly in renewable energy products and smart grid technologies. They also just paid their dividend out today, as I am personally a holder of National Grid in my portfolio, so I did receive a tasty dividend earlier today. Next, we're going to have a look at some key statistics to do with National Grid. They are based in the United Kingdom. They are part of the utilities industry. They have a market cap of 44.8 billion. They went public in 2002, have over 22,000 employees, are on a 6-year dividend growth streak, have a 5-year dividend growth rate at 2.82%, and have a very nice yield currently sitting at 5.99%. Over the last year, as you can see on the graph, they have performed pretty bad, being down 6.74%. And in today's video, we're going to have a further look into, is National Grid stock a buy right now? I'm really excited to announce that today's sponsorship is from none other than a really cool dividend tracking app called Snowball Analytics. I think you'll like it a lot and I want to tell you more about it. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Rolls Royce of portfolio trackers. I have personally been using this app since the start of my investing journey, and I'm extremely impressed by how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive, and I find the platform very easy to navigate. Plus, it's packed with so many different charts and graphs that do all the hard work for you, so you can really understand different aspects of the portfolio. It not only dives deeper into your own personal portfolio, but also into individual stocks as well. Pretty much anything you want to know about a company's financials or dividend history can be found here within the Snowball Analytics app. In my opinion, what really sets Snowball Analytics apart from the rest is the features that it has designed specifically for dividend investors. This app tracks your portfolio so closely and has a very robust event calendar that shows you all relevant information you need to know about your stocks, as well as potential income coming in, and it predicts the income you are likely to receive in the future as well. Not only that, it adds total returns to your stock with the dividends you have also received, which no other dividend tracking app can do. This is so important as it can really show you the bigger picture and highlight how well your portfolio is actually performing. If you are interested, then please click my link in the description to check out Snowball Analytics. You can also get a free 2-week trial so you can try it out for yourself first and see if it's for you. Let's get back to the video. Next up, we are going to have a look at National Grid's earnings call and fundamental analysis. Their earnings call, National Grid saw a drop in operating profit by 14% to 1.8 billion. While their underlying EPS met expectations at 23.8, with full-year guidance unchanged. The company will increase its investment in decarbonisation, raising capital expenditure targets to 42 billion, and integrates electricity distribution, achieving 100 million in synergies. National Grid's performance reliably remains robust, with plans to increase grid capital by 10 gigawatts and complete key infrastructure projects by 2026. Some key fundamental analysis to do with National Grid: they have a positive net income at 2.3 billion, positive gross profit at 17 billion, positive operating income at 6 billion, positive 3-year revenue growth at 13%, positive ROE at 8%. They have solid long-term solvency. They have an average Altman Z-score at 1.25, average interest coverage at 3.66, and currently have a negative free cash flow at negative 544 million and positive net debt at 42.2 billion. Obviously, negative free cash flow is not a good sign for a company, so we're going to dive a little bit deeper into that and have a closer look at it. What is free cash flow? Free cash flow is the money a company has left over after it pays for all of its expenses and any investments it needs to make to keep the company running smoothly. Free cash flow has a massive impact on the direction a company may be heading. As we can see from the graph, National Grid has a negative free cash flow right now, which is never a good sign. However, for National Grid, negative free cash flow is likely the result of a combination of high capital expenditure, debt servicing, and long-term investments in infrastructure. As a utility company, it is common for large infrastructure investments result in temporary free cash flow shortfalls. But these investments are generally aimed at securing future growth and improving reliability. If National Grid is able to generate higher operating cash flow or recover more costs through regulatory mechanisms, negative free cash flow may only be short-lived. But it is important that that is true, and it does stay short-lived, and you need to see improvement over the next few quarters, because continued negative free cash flow could lead to the company heading for a disaster. Their payout ratio is also currently sitting at 114%, which is well above that 70% mark, which is my comfort zone. So there's also that to consider with this company. Next up, we're going to have a look at National Grid's discounted cash flow valuation. A DCF is a method used to estimate the current value of a company based on projected future cash flows adjusted for the time value of money. The DCF valuation process calculates the present value of a company's forecasted cash flows based on selected operating models. National Grid's current price is 917 GBX. And when plugging in a discount rate of 8% and a terminal growth rate of negative 2%, we can see that National Grid was only worth 255 GBX. Then when plugging in a discount rate at 7% and a terminal growth rate at 0%, we can see National Grid was valued at 540 GBX. And when plugging in a discounted rate at 6.5% with a terminal growth rate at plus 2%, we can see National Grid was valued at 1,223 GBX. I not only look at the discounted cash flow valuation, but I also look at something called the relative valuation when valuing a company. The relative valuation is a method used to value a company by comparing it to other competitors based on certain metrics. The metrics it uses includes EV to revenue, EV to EBITDA, and PE ratios. When plugging in my numbers for National Grid, on the worst case scenario, their relative valuation came out at being worth 1,574 GBX. On the average case being worth 1,862 GBX. And on the best case being worth 2,218 GBX. From this, we can come up with something called the intrinsic value. The intrinsic value is something that's been used for many years to calculate a stock and come up with a fair valuation for that particular stock. To get the intrinsic value, what you have to do is simply add the relative valuation and the DCF valuation together and divide by 2. My intrinsic values for National Grid were the worst case scenario, it being valued at 915 GBX. On the average case being valued at 1,201 GBX, and on the best case scenario, it being worth 1,720 GBX. When I value a stock, I not only get the intrinsic value for that particular stock, but I also like to look at the Wall Street estimates so that I have a variety of different valuation methods for that stock. Wall Street estimates are an average estimate of a public company's quarterly earnings and revenues that leads to a valuation of that particular company. These numbers are forecasted by company-specific analysts who provide research on that particular company and therefore come up with what they believe is an accurate valuation. So, for National Grid, on the worst case scenario, they believed that the company would be worth 1,050 GBX, which is a 15% upside. On the average case, they believed it would be worth 1,158 GBX, which is a 26% upside. And on the best case scenario, they believed it would be worth 1,286 GBX, which is a 40% upside. Overall, if we remember National Grid's price is currently £9.17. Now I have all three valuation methods. I can combine them together to get my average, best and worst case scenarios for National Grid and see if it's trading at an attractive price. On the worst case scenario, National Grid would be worth £9.60. So with a 10% margin of safety, you'd be looking to buy the stock at £8.64. And with a 20% margin of safety, you'd be looking to buy the stock at £7.68. On my average case price, they were valued at £11.87. So with a 10% margin of safety, you'd be looking to buy at £10.68. And with a 20% margin of safety, you'd be looking to buy National Grid at £9.49. And finally, my best case scenario, they were valued at £15.75. So with a 10% margin of safety on this price, you'd be looking to buy at £14.17. And with a 20% margin of safety on this price, you'd be looking to buy at £12.59. Well, what does this mean for National Grid? Is the stock a buy right now? With my overall results showing that National Grid is cheaper than the buy price with my average case results with a 20% margin of safety, this to me is always a very positive sign, as I usually go off my average case prices for mid-sized stocks such as National Grid. National Grid has also recently received positive attention from financial analysts. Goldman Sachs upgraded the stock from neutral to buy, citing improvement financial standings following a $7 billion equity issuance and dividend rebasing. They set a target price of £10.59, noting the stock's attractive valuation compared to historic standards. Not only have Goldman Sachs done this, but also Citi and Bank of America Securities have increased price targets and have them both as a buy right now. With National Grid, you still want to consider their extremely high FCF payout ratio and the negative free cash flow, as if this isn't sorted, then it could be the main downfall of the company. But with their 6-year dividend growth streak and already being a very high dividend payer, could right now be a good time to buy this stock? Let me know in the comment section down below. Do you own the stock in your current portfolio, or are you looking to add this stock to your portfolio? I hope you enjoyed today's video. Please let me know if any other stocks you want to see a full breakdown on. Thanks for watching. Please like and subscribe. This is the Geordie Pig Investor. Over and out.